Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the indexes. We're going to take a look at the bear ETFs. Okay, and so we're going to be looking at the inverse ETFs, and then there was the huge drop today. Obviously, this was a historic move for the Dow Jones Industrial Average this week. Closing down today 1,032 points. I mean, it was a 4% drop. There have been bigger drops, but point-wise, this was the one of the largest drops of all time. So this is twice this week we've had this 1,000-point drop, and as you can see here, you have RSI now hitting 30, the oversold line. Check out FASTO all the way down here at 2.8. This is the same. So basically, it's extremely oversold. That goes without being said. And what happened was it came down and hit this 100-day simple moving average at 24,075, the gold line here. Okay, and it bounced, but it failed to get back above that 50-day simple moving average at 25,091. Failing to break that level signaled the pullback, and then today that closed below the 100-day simple moving average is signaling more downside risk. It has to get back above that level. So below 24,000 for the Dow is going to signal downside risk, and if it turns into resistance, it could work its way back down to this 22,778 level, which is the 200-day simple moving average. So look, this was an extremely bearish close near low of day and below that lower Bollinger Band. So many times the candles will work back into the bands. If they do, what has to happen is it has to close above EMA 4, currently at 24,570. If it stays below EMA 4, it'll be a signal that the bears are still in control, signaling more downside risk. Take a look at SPY, SPY, the Spider S&P 500 ETF, and if you look here, it's still it's above 30. It's above oversold on RSI, and so RSI hasn't hit that oversold level yet. It could bounce and stay and get back above 50. If it stays below 50, that's going to be signaling that the bears have taken over. If you see here, FASTO is now below 20 and at oversold levels. You have a pinch situation here on plus DI with ADX and plus DI. If the green line crosses the red line to the downside, you have to go off the chart here to find the last bearish crossover on ADX. That will be a clear signal that the bears have taken control. Now we were, okay. So this is the weekly chart. Okay, so sorry about that. I wanted to show you the weekly chart on this because the big break this week below the middle Bollinger Band is a major red flag. Okay, so this can change, and so a close for the week below 50 would be a red flag. Below 20 for the week would be a major red flag. Everything being a weekly chart, this is going to be showing a stronger trend, and so this is going to be a bigger signal that the trend is changing if this weekly chart turns bearish. And so in order to keep the uptrend going, it has to stay above that middle Bollinger Band at 263.90. If it fails to stay above that level, that's when a downtrend could begin. And the next support level's down here at the 50-week moving average at 248. So that's the next target below. If we'll call it 264, if that level fails to turn into support, if it fails to break that resistance level, you could see a drop down to 248. That's the next major support level. Notice there was a giant volume spike, so there was major selling into the close, and many times that signals that it's going to try to push lower. So we will see if it can correct next week and possibly get back above that middle Bollinger Band. It's going to be really important that it does. There was a bearish crossover on MACD, so that the MACD line crossing over the signal line. If you go back here, that was the last time there was a correction. This is the first time that the middle Bollinger Band has broke in quite some time, and so this is a major red flag. If you look at the NASDAQ chart here, this is the daily chart, and you can see it now. So this is the daily chart, not the weekly chart, and it's hitting down here the 30 oversold level on RSI. So if it drops below 30, that would be signaling that the NASDAQ is at extremely oversold levels. So it's gone from up here in the 80s down to 30. So this is a major correction. Notice that Fasto closed at 0.05. That's extreme oversold. The close today was low of day. Look how there's no wick on today's candle. There's no lower wick. That's extreme bearishness. That's called a red closing Marubozu candle, and basically Bozu candle. And basically what it's saying is that their low of day was the last traded day of the day. The bears control the action all the way into the close. Now this did happen here on Monday and Tuesday. They got a bounce, but there was a gap down open that day at the 100-day simple moving average. You know, there is a government shutdown. It looks like it might happen. You know, that's what the headlines are saying, that they, you know, prepare for a shutdown. And so this could have a gap down open tomorrow. We'll have to see how the markets react. But you know, the next big support level is way down here at 6553, the 200-day simple moving average. You know, this got really bearish, you know, a lot sooner than the S&P 500. When the middle Bollinger Band broke, you know, back here on the 3rd, that was signaling that the chart was really breaking down, and it signaled the start of a new downtrend. And then now having the 50-day simple moving average break, and then the 100-day simple moving average break, it's just a major signal that the bears are in control. It has to get above EMA 4 at 6981. Any kind of bounce will just be a short cover rally like this white candle right here until EMA 4 breaks and turns into support. So just keep that in mind. It's easy to, you know, when the markets are pulling back and they're under immense pressure, it's really important to take profits on the bounces until they can prove that there's going to be an uptrend, because that's your chance to lock in gains. And so so let's check it out here. We're looking now at SPXS, XPXS, and this is the S&P 500 3 times bear. And so the next charts that I'm going to show you, since we have the indices under pressure, and they're you know, pulling back big time, you know, the place to be, you know, this week has been in all these ETFs I'm getting ready to show you. They're all inverse ETFs. It's a way to short the market by going long a bear ETF. You know, we are always looking for, you know, the big gains, and so the bear 3 times ETFs are the way to go. Most of these do trade options, and so the options, you know, the calls have been on fire with the big move, and they've been delivering really big gains. If you look here at SPXS, you know, this has been on a really strong uptrend. So it's the inverse of what's happening with the SPY. And so basically, if you look here, it got above the middle Bollinger Band on the 3rd. That signaled the possible start of a new uptrend, and so this really caught our attention. And then when it got above the 50-day simple moving average here, you know, that was a signal that the bears were clearly in control. This was a major buy signal, and notice that it was on huge volume. The big thing about the moves on these bear ETFs I'm going to show you is look at the volume bars. Okay, there is heavy volume in all of these ETFs, you know, leading, you know, at the start of this run, for the bear run. They've been waiting, they've been in hibernation for a very long time, and they came out heavy. This big load here, it signals that there could be some legs to this move. There's really big money behind this bear move here. They really went in heavy, and so and it's going to show up on all these charts. And so now today there was a close above that 100-day simple moving average at 3167. This does not look good for the S&P 500. If this level turns into support, you know, it could run up here to 36. That's the next big level to break. This is a very strong uptrend. This is when you want to load. You know, it just really comes down to being on the right side of the trade, and the trend is your friend. And so when the markets are under pressure, these bear ETFs are your friend. They're a way that you can you know, make some money as the markets are dropping. And so here's TZA. This is the small cap bear 3 times. And so this is shorting the small cap stocks. And as you can see here, you know, you do have RSI and Fasto at frothy levels, and the same thing with XPXS. You know, you have it here up here at 70.99 on Fasto. So they're very overbought right now. You know, that goes without saying. You know, they're pushing hard. With this close here, look at TZA. It closed at high of day, so there's no upper wick on the candle. And notice that there's no lower wick on the candle. You know, the low of day was the first first trade and high of day was the last trade. The bears were in control the entire day. This is a beautiful bullish chart. You know, this is really, really strong. It's writing EMA 4 support higher. It broke the 50-day simple moving average, the 100-day simple moving average. As long as 1280 holds, then 1479 is the next target, the 200-day simple moving average. You want to see EMA 4 at 1309 stay support. If it closes below and drops below the 100-day simple moving average, that's going to be your signal that it's cooling down. Notice the big volume spikes behind the mood. Okay, look at MIDZ. Okay, this is a very thinly traded ETF, so it's not you know, highly recommended, even though it does trade options, but the options is crazy low volume. But check it out. This is shorting the mid caps, and you can see here it's got the same pattern. You know, even though the volume's super low, look at that giant volume spike for this very small, you know, thinly traded ETF. But, you know, once they get above the middle Bollinger Band, you know, back here in November, that level failed to hold, the dotted purple line, which is also the 20-day simple moving average. You know, it closed above here, failed to hold, the downtrend continued. And then once it finally held, you know, this candle here was telling you, okay, this uptrend looks like it's really happening. And so if you didn't load on these candles, this break above the 50-day simple moving average was a signal, okay, this is really on play. Once a stock forms candles above the middle Bollinger Band and the 50-day simple moving average, that's your signal, okay, the bulls are strongly in control and there's more upside potential as long as that 50-day simple moving average holds. That's currently at 13. Right now it needs to hold the 100-day simple moving average at 1439, and then it needs to break that 200-day simple moving average at 16. Okay, let's look at EDZ. Okay, so this is emerging markets bear 3 times. Okay, so this has been, you know, on a big run. It closed up 11% today. You know, it's getting close to that 70 overbought level. You know, this is a very high level for EDZ, you know, because it's been in a downtrend. And if you look here, Fasto did close at 100, so it's temporarily overbought. It closed at high of day. You know, they're crushing emerging markets right now. It's hitting the current level that it topped out at in December. Notice it hit the 100-day simple moving average, this gold line, and pulled back. Well, today it closed above that level. So that's the key level. If it stays above 952, so basically above 950 for EDZ signals more upside potential, and then you're looking at the next target as the 200-day simple moving average at 1149. So fail to stay above 950, the candles will likely work back into the bands, and then you want to see it hold the 50-day simple moving average and EMA 4 down here at 877. As long as candles are staying above EMA 4, the chart is very, very strong, and it signals more upside potential, and for swing traders, the signal is to keep riding. You know, the close below would be a signal that it's starting to cool down. As long as the middle Bollinger Band holds on all of these bear ETFs, it's a signal that they're in an uptrend. Okay, so if you look over here, you know, this is a multi-month, this is like a 6 or 7 month chart, and you can see for multiple months, this ETF has been in a downtrend, forming candles below the middle Bollinger Band. Every time it gets above it, hits the 50-day simple moving average, it pulls back. So now this is reversing, okay? So this is a major change in trend. If these levels hold, if the candles stay above the 50-day simple moving average and above the middle Bollinger Band, this could have a prolonged uptrend. Okay, so this might not be, this volume down here is a red flag for people that are bullish on the markets, that this might not be a V-shaped recovery on the bounce, that it could work out for a little while. This could be more of the bigger correction that everyone's been talking about. So it would be great, would love to see a V-shaped recovery, just saying that these bear ETFs are signaling that the bears are strong and that they are currently in control. Look, check out DRIP. Okay, DRIP. We had been alerting this, you know, in our chat. It's a bear 3 times. ETF here for, it's for the oil and gas. And so basically, while oil has been tanking, this has been a really good place to go. You know, but on the 29th down here, it closed above the middle Bollinger Band. That signaled the possible start of a new uptrend. Because notice how it closed above before, but it kept pulling back. Then now it finally broke out. Got above the 50-day simple moving average, above the 100-day simple moving average at 1462. That's a key level to hold on a pullback, and EMA 4 at 1534. And then now it's hitting the next key resistance levels. It has to get above that 300-day simple moving average at 1745, and then the 200-day simple moving average at 1869. If you look back here in October, you know, it topped out at those levels. You know, if it can break out above 19, that is going to be super, super bullish for the bear ETF DRIP. and it's going to be very bearish for oil and gas. And so yeah, and so if 19 fails to break the 17 to 19 resistance level, then that could signal a temporary top. You know, analysts are calling for oil to head to lower levels, and so there is a chance that it could break above 19. So keep an eye on it. Okay, so the banks have been under pressure. The banks are getting crushed as well. And check out the FAZ. Okay, financial bear 3 times. Okay, closed up 12% today. Okay, these are some names that were really hot and heavy back in the past, and now they're back in play. Notice you've got RSI at 70, Fasto at 100. It's temporarily overbought. Okay, so you know these were really good if you were able to jump in at the start of the week. You know, if you were in last week, the start of this week, that was a really great time to load all these bear ETFs. They're starting to get a little long on the tooth, a little frothy here, so they're going to have to be able to hold support to be able to keep pushing higher. Or, you know, if the bulls step in, you know, these could reverse and take a little bit of a pause and do some consolidation. They could keep the uptrends going, but yeah, in order for FAZ to keep breaking out higher, it has to stay above 1262. That's the 100-day simple moving average. If you see it drop below 1260, that's going to be a signal that it's starting to cool down, and then you could see it pull back and test that 100-day simple moving average. That's going to be the big level to hold. If it can stay above the 100-day simple moving average in the middle Bollinger Band, that's going to signal to keep shorting the banks. You know, EMA 4 at 1191, that's an easy way to play it. You know, if candles are staying above that level, the chart's super bullish. Once it closes below, you know, that's when you could possibly switch over to FAZ, and you know, that's where the banks could get a bounce. But the big volume, once again, is so strong that it signals that they were loading for higher levels. So, you know, you're looking at the 200-day simple moving average basically at 15 is the next big level to break, and then you have the 300-day simple moving average right above at 1670. Okay, so technology has been getting crushed. The FANG stocks, you know, they topped out. They were trying to hang in there, and then bam, you know, Apple's already in correction mode below 10%. You know, playing the bounce has not worked out. It's been catching a falling knife. A lot of people getting burned, and you know, Amazon, you know, Facebook, you know, Google, you know, they're all under pressure right now. And so right now TECS has been heading higher. It's up 12% right now. If you look here, RSI is at 67, so it's not above the overbought level yet, but it's hitting that level. And so it has the same setup. It broke above the middle Bollinger Band, and then it got above that 50-day simple moving average, took a couple days to turn it into support, and now it was the big breakout higher. Now it's all about staying above the 100-day simple moving average at 725. If it can hold that level, then it could possibly run up there to the 200-day simple moving average at 888. You know, this is going to be a big resistance zone here. You know, can it get through 750? That was the previous top in December. You know, it's hitting that level now. It had that big pullback, and then bam, it ran up to that level. Breakout above 750 would be very bullish for TECS, and it would be very bearish for the technology stocks. Okay, so FANG and all those stocks are going to be under pressure if this is heading higher. Okay, take a look at the biotechs. Okay, bear, this is the LABD bear, you know, 3 times ETF, and so it closed up 15% today. Notice that RSI is at 53. So this is kind of interesting because most of the other ones, and unfortunately, you know, it doesn't trade the options. You know, if you're on the wrong side of the trade, that might be fortunate. But yeah, if you're a good options trader, you know, yeah, unfortunately, it does not trade options. But the chart is heating up nonetheless. Notice how this is just starting to heat up. It just closed above the middle Bollinger Band. All right, that level is turning into support. It's not above the 50 and 100-day simple moving averages yet, even though they are just above. And so basically, it's going to be all about that 100-day simple moving average at 463. If it follows the other bear ETFs, it's going to break out above those levels. And so notice how they all got above that 100-day simple moving average. Okay, each one of these charts, except for LABD. So this is the lagger. So the biotechs are, you know, they held up a little bit better than the other sectors. But, you know, if you're looking to try to get a little catch up, this might be the play right here, or one of them, you know, so keep an eye on it. You know, this could have some more upside potential. You know, there's not huge percentage gains, but between the current level and up here. But hey, a 15% gain is a 15% gain, right? And yeah, it has to break above that 100-day simple moving average there and turn that level into support. If it fails to do that, that would signal a temporary temporary top. If the middle Bollinger Band there at 352 turns into support, that would signal the possible start of a new uptrend. Once again, notice the huge volume. I mean, the volume going on right now in all these bear ETFs, it just dwarfs the previous volume. And that's what you want to see at the start of a new uptrend. You want to see big volume. Big money, the people in charge, the ones that are, you know, the 1%, the ones that are, you know, the financial institutions, you know, they're going to be all about the volume. Okay, so they're going to be loading at the bottom. Okay, so it's all about following the volume, because the big money loads at the bottom and they sell at the top, and so that they show their cards through the volume bars. And so what they're telling us here with their big positions is that they you know, they were looking for more upside potential. Now is this going to play out and it's going to top out here? This is ERY, so check this out. This is the energy bear 3 times, and so, you know, with energy being under pressure, this ETF has been heading higher, and so it's up 9% right now. It is frothy. You have RSI at 74. You have Fasto at 100. It looks super overbought. You know, it looks like the easy money's been made. It ran from the middle Bollinger Band here all the way up to the 200-day simple moving average and 300-day simple moving average. That's why you don't want to get caught chasing here. You know, it's like the, you know, I'm showing you all these bear ETFs, but they could flip the script and the markets could bounce, and then these could all, you know, take a breather while all the bull ETFs jump into play. And when that happens, I will post a video showing you the inverse of all these ETFs I just showed you, all the bull ETFs, and so that you could play the bounce through the ETFs. That's just another strategy. And so what's going to happen here is it has to break that 200 and 300-day simple moving averages. If you can get above 1130 and 1169, that's going to signal it wants to head higher. Keep in mind, these are always super huge levels to break, and they are the sell zone. Okay, this is where you lock in gains, and then if it breaks above, then you could re-enter. But you always want to be looking to lock in gains at that 300 and 200-day simple moving average if they're at the top of the chart, because that's the, especially when you have a big move like this. But if it breaks above and it turns into support, then you want to jump back in. That's just a you know, just one strategy, and more times than not, you're glad that you locked them in at that level. Now, if it busts above, that's going to be a major red flag for the energy sector, and it will signal to jump back in, and that this could break out higher. So keep an eye on DRV here. That this is the real estate bear 3 times. This is once again super frothy. This is thinly traded. It only has 121,000 shares, but real estate has been getting crushed. This is probably the most bearish of all the charts. Okay, so this is the most bullish of all the charts that I've showed you for the bear ETFs, meaning real estate has been the most bearish sector, or at least it looks like it on the charts to me, just checking out these ETFs. You have RSI up here at 79, Fasto at 100, so it is super frothy. Look at Plus DI, just pushing up here at 48. You know, it's at very high levels. This is a daily chart, and it's a little bit hard to read, but I wanted to show it to you so you could see where this is headed right now. Now notice how real estate has been under pressure since the start of the year. I mean, this has been, you know, it bottomed out down here in December, and since making that low, notice how it came off of the low. I mean, this goes all the way back into 2016. So the lowest level since back in, you know, off this chart was the bottom, and then it's just gone straight up. And look where it's headed. It's headed up here for about 1625, 1650. That is the high from back here in November, and it looks like it's what we call filling the jar. So it came all the way down, made the low, and then notice how it flies up. You know, like they say, you know, bullish stocks, you know, staircase down, and then they elevator, or a bullish stock staircase up, and then they elevator down. Everybody's using that analogy right now. And so right now, you know, on this chart, since this is the bear ETF, you have where they were walking it down, and then bam, you have the parabolic move up. You know, this is the elevator up since it's the bear ETF. And so keep an eye on 1625. If it fails to break 16, it's going to pull back. You know, it's super frothy right now. As long as it's holding EMA4 at 1449, the chart is extremely bullish. That level has been holding during this big move this last 2 weeks. And so if it closes below, that's when it's going to be your signal, okay, it's finally cooling down. But yeah, keep an eye on all these bear ETFs. You know, you know, if this isn't the big one and the markets, you know, do correct and then they pull back somewhere saying, and retest the recent highs before the real big correction. Just keep in mind that this is a great way to play the next time the markets have a pullback, and these are all currently in play, and they are a major red flag, signaling to everyone to take caution out there, and to think about possibly looking at some bear ETFs as a way to get some percentage gains while the markets are pulling back. Just be careful chasing. You don't want to chase anything, and you don't want to be on the wrong side of the trade. Okay, be careful out there, everybody. Thanks for viewing this video. If you like this video, come check out our chat. We're everybody's learning in there. It's a great educational environment. I'll post the link below the YouTube video. Thank you.